Hi, and welcome back to my channel. As you can see, I took a pretty big beating this week. The biggest thing that happened is I put in $100 and lost over $100. So we'll go ahead and take a look. And it says only down 66 on the week, but if we look at the month, down 71, and from that all-time high, or really the high of the month, that's plus 60 and minus 70. So as you can see, down about $130. So not looking great. Clearly this week, the biggest thing was that China had escalated the trade war, devalued their own currency, and there's a lot of issues with that, a lot of worries that the stock market's going to crash. So we're going to go ahead and look at my all-time graph now. As you can see, I was doing really well there for a while. Had this big upstretch in July, and then here in early August was up big again. But the last week, it has been horrible. So thankfully, yesterday I was able to make a little bit of money and make a little bit of a comeback. And Bitcoin, again, today has not performed great, down 2.3%. So not the end of the world, but still not looking great. So we'll go ahead and take a look at my stocks and figure out what's doing well and what's not. So my Vanguard Total Stock Market ETF is down. I have lost, $12.76, so about $6 on each one of those. So over the last month, just like the stock market, not looking great. 3 months, still not looking terrible. But again, because this is a total stock market index fund, the big thing to look for is going to be a return of the stock market to levels that it was at. So I'm not surprised on that one. Vivint Solar, I seem to talk about every week. Again, my highest holding of any stock that I own. So I'm currently at 34 shares. Average cost went up a little bit, but back up to $44 on my return. So as I talked about last week, Vivint did not have a good earnings report. You can see they were doing really well there, and the earnings report came in, and it lost about 20% of its value in a day. But if we go back to the year, we can see that even with that little hiccup, it's trending upward. And all the research that I've done has kind of said that Vivint should be able to make a comeback. Big problem was they refinanced some of their different plans and took on $325 million in new debt. So we'll see how that works out in the long run. All right, and we've got Agilent. And Agilent has made a comeback, a big comeback, so I'm back up on that one. Over the last 3 months, we can see hasn't done a whole lot. Over the last year, hasn't done a ton, up 9%. Over the last 5 years, we can see that it has performed well, so I'm hoping that'll be a company that continues to perform well in the future. Microsoft, 136. I bought at 124. So that one's kind of held steady over about the last month, as we can see, down $1. But again, Microsoft is a company that seems to be universally recognized as one that you want to buy. So I'm happy about that. Then we've got Logitech. Got 3 shares of that. 38.73. So down 49 cents or almost nothing. Pretty stagnant on those. It's been up and down. Down over the last year. Over the last 5 years, it's up. So looking for a return on that one. And if I remember correctly, this one does have a pretty high buy rating. Trading 2% higher. Yeah, 92% buy rating, so I'm pretty confident in that one. And Pfizer has performed horribly. They sold off a part of their pharmaceutical division, and since then it has not done well. So you can even see into late July trading at about $40 to $45 and just hit a wall, and it's been down since then. If nothing else, I'm hoping this may actually be a good time to buy. I could be wrong, but I am hoping that it's a good time to buy Pfizer, and it'll continue to trend upwards. Nintendo, here we go, $47 a piece, and I've made about $1 on each of those, so I'm happy about that. Up on the week, even with everything that's happened, they haven't been affected too much. 3 months it's up, and we'll just skip to 5 years. Looking pretty good. So as you can see, 84% buy rating. So I'm pretty happy with that one. Charles Schwab, I've lost quite a bit of money on, $6 a share. Now 55% buy rating, so supposed to be a good stock to have, to own, to buy right now. Haven't quite seen anything yet, but it's a little early on that one, and I'm hoping that one will do well for me. Four Corners Property Trust. I was looking to sell this actually for a little while. I had bought it just to kind of see what would happen. I wasn't too confident in it to begin with. I was more intrigued at the dividend that they were paying and how high it was. But it's made a comeback, and I'm only down 2.5%. But if I remember correctly, their dividend is almost 5% a year. So it's down over the last 3 months, but fairly stagnant. Up a little bit over the last year. Over the last 5 years, it is up quite a bit. But as I stated before, I am more excited for the dividend out of that one than anything. Sony. I still have those 2 shares trading for $55.73 a piece. Down 30 cents on those, so not much movement at all. You can see over the last month, hasn't done a whole lot. Over the last 3 months, it is up. Year kind of stagnant. 5 years up quite a bit. So again, 77% buy rating. Happy with that one, and I think that should do well for me. Now, this is a new one. Because of everything that happened this week, I'd done some more research into stocks that are maybe less prone to a recession or recession-proof, if at all possible, and I came up with Coca-Cola. And after doing some research, what I found is that they are known as a Dividend King, which means that over the last 50 years, they've raised their dividend every single year. So currently, they're paying 40 cents a quarter, which is not a ton, but we do know that Coca-Cola is going to keep or even increase their dividends as they've done each of now the last 55 years. And a lot of the research that I did said that the reason Coca-Cola is fairly recession-proof is that as a company, people don't tend to decrease their habits of drinking soda or soft drinks or any sorts of beverages in a recession. It's not a necessity, but it is sort of an everyday item, and they don't get hit too hard. So over the last month, you can see they're up. Over the last year, up 17%. It's lagged a little bit, 37% over the last 5 years, but a lot of that coming in the last year. But the point here being that Coca-Cola is something that shouldn't get hit too hard in the case of a recession. And I've got actually an article pulled up for why this is the case. So here are 3 reasons it's a buy for conservative investors. And they go on to talk about, here we go. This is a little old now, but it says 15% in the last 5 years, which underperformed the Dow Jones, but they still think it's a good one. And they talk about it's a recession-proof business because, again, it's a consumer good that people tend to continue to use in a recession. So they talk about here, let's see, in the entirety of 2007, they generated $28.6 billion in revenue. And it saw, let's see, over the course of 2008, deep in the throes of the financial crisis, their revenue rose and operating income rose even more. Now, they go on to talk about how their business did get hurt a little bit during that recession, but clearly everybody's did. They shed 37%. But because they pay that high dividend and we know that they're going to bounce back, they're a proven company, that's something that a lot of people are confident about. And here is a graph of the dividend. As we can see, every single year, they just have continued to increase their dividend, which, if I choose to keep this stock in the long run, could be huge. And we'll go ahead and take a look at Bitcoin because it has been all over the place this week. As you can see, I still own a little bit of Litecoin, but that's not much of anything. Bitcoin has struggled today, clearly. But as we can see over the last week, it was down real big, peaked at 11.5, down all the way to 9.5, and then it was up there for a little while, and back down. And I did sell off this week as I was a little bit concerned, and then ended up buying again. So down about $10 on that one, but as we know, Bitcoin can skyrocket 2% in an hour, so that's not a huge deal. But as I talked about kind of trying to find recession-proof things to do, I did find a couple more articles about gold and how that, can be something to look for in the case of a recession. So here we have this week gold climbed, well, this was last week, but gold climbs to a 6-year high and bond yields collapse as fears of global slowdown mount. So here they talk about how gold rose up to $1,500 an ounce last week, and that was the first time in 6 years. And that's largely because the Dow fell 2%. And we know that there's a fear of a global recession, both due to what's happening with China and a myriad of other things. And this article isn't horribly helpful, but we do know that gold is trending upward. And here Goldman Sachs says that they predict that it will be up to $1,600 an ounce within the next 6 months, which is huge. And I've actually got this graph here pulled up of the price of gold over the last year. So we can see that August of last year was trading at $1,175 an ounce, and it's kind of steadily risen. And here we know that yesterday, on Friday, it was trading for just above $1,500 an ounce. So that's something interesting to take into account. And I don't know, in the long term, I've thought about maybe looking into gold. I'm not entirely positive on that one, but I think in the long term, I do want to try to diversify a little bit more, find more high dividend stocks, especially right now, find things that may be recession proof. Just trying to do my best to not lose money when the market's down. So thank you for watching this video, and I'll be back next week.